Today we want to talk about the steps in purchasing a commercial property. In purchasing commercial property, first you have to try to find the off-market deal. Why we are saying off-market deal? Because when you are finding an off-market deal, you can talk to the seller directly and you can see exactly what is the seller motivation. Because when you actually find out what is the seller motivation, you can negotiate with the seller and you can try to get the VTB or seller financing from the seller. And you also should obtain property income and expenses and rent roll. When you are actually getting the expenses and the income for the property, you have to try to actually get the past 5 years. But you have to compare those past 5 years with the actual income and expenses that you can actually find it through internet, or when you're talking with your property manager, you have to ask him, well, how much usually costs for this property to actually maintain it, or how much is the property tax, how much the insurance, and what is the income. And the rent roll. The rent roll is a document that shows which tenant are paying how much and how long they're staying in the property. If you have these documents, and if you actually find out that this document is real, you can go to next step. The next step is analyzing and evaluating the deal and the market. When we are analyzing the commercial property, we have to know how to calculate the cash flow, cash on cash return, cap rate, and DCR, which is debt cover ratio. We are explaining all of these calculations in different video, but all I'm saying is you have to be very much professional in actually calculating cash flow and cash on cash return and cap rate and debt cover ratio, because if you can't calculate this stuff, these are the first step to analyzing the deal, and you might actually make a big mistake by actually not be able to calculate these correctly. After you calculate these, you go and you compare the sales comparison. You go to MLS or you go to other sites to see what is the sales comparison for this commercial property, what is the rent comparison, and what are the market cap rate. And after you go to the site and you go to on-site visit to actually evaluate the property and evaluate what you calculate. And the next step is a decision-making step. After you analyze the deal, after you see all the payrolls and you actually did your research, at that point you have to decide either you want to go with the property or you don't want to continue to go with the property. The next step is making an offer. So imagine you decide to go ahead with the property. What do you do next? You make an offer for the property, and at that point you go and handle the counter offer situation. What is the counter offer situation? Usually when you go to the site and you visit the site, there are some problems with the property. Usually the roof needs work, the units need renovation, the windows need some work. So at that point, you can, in your offer, you can write down this stuff and you can actually attach an inspection report, a little inspection report that you have done in the property, and you can try to see if you can get a discount from the seller, which we call it counter offer. In counter offer situation, in a lot of times you can get a lot of discount from the seller, and that would be the point that you can negotiate with the seller, and at some point you can actually persuade the seller to give you seller financing or VTB, which play a very important role in actually making the property more profitable compared to other property. And once your offer get accepted is the point that you have to go and do your next step, which we are going to actually talk about in the next slide.